What do you use the current day high and low for when trading? They're just, I mean, you can look at that as a range again. Right, Jeff? So let's zoom out this chart for a second. Just for fun. Okay? Let's look at this as a whole here. Okay? So we know that we traded inside the little range that we were trading in. We've already got that. We already had that, the gray box, right? Obviously that's gone now. This can be considered a range. Your current day high and low. Then your orange lines are yesterday's high and low, right? So if you're trading in yesterday's range, then you can use that to your advantage too. You know what I mean? It's just different ranges, that's all. You also take closes above daily high and low then. Not really. Not really. I mean, I don't really look at it that way. Yeah, but that you could, I mean, there could be an opportunity where you trade it depending on how price action plays once you get around it. Yes. And there could be an opportunity where, you know, its current structure. So you take the trade there. Yeah. So it just depends. But just the high and low, no, not necessarily. You have to have the setup first. Why do you draw it up then? Like, how do you use it besides just drawing it up? Well, I draw it up and I pay attention to that as an actual range that we're trading in, realizing that once we get to the high, there's going to be orders there, right? You'll have people trying to short the high and long the low. So that's what I use it for. Because for me, Jeff, it's got... Thing is, with most traders, they're looking for, you know, all these different things. They're looking for something like this, right? So they'll draw something like this up on their chart and they'll say, all right, you know, this is what I'm looking for. So once price hits this, I'm going to short. Or they're looking for a line, you know, here's the line on their chart. Okay, so once price hits that, they're gonna short, or they're looking for, you know, a pattern that plays out. So once price gets there, they're gonna short. You understand what I'm saying? This is always what they're looking for, and I don't trade that way. This is why I say all the time, I trade reactions, not predictions, because just because price comes into this area, to me, doesn't mean anything. All that means is this is where people are traders, you know, are going to be going short. So that's what I'm looking for. And the same thing goes for your high and your low. Traders are going to be placing orders there. So once you know that traders are going to be placing orders in these areas, that's now how you know where your liquidity is for that area. And that's what we're looking for. We're looking for these orders to come in, and we're looking for these positions to fail, right? So they come down like this, don't do anything, and then what happens next, you already know. They come back up for a test, and you'll see a little action like that and a breakthrough. And those are the areas that we're trading. Hopefully that makes sense. I mean, and that's the whole thing. Everybody always talks about this area that they're going to trade, or that area, or this is a, you know, a bearish order block, or this is now a breaker block, or whatever the case may be. Well, I got to be honest with you, the market doesn't give a crap about where you want to put a line or draw, you know, a order block or a breaker block or anything else. The market don't care. So the only thing that drives this market is orders. That's it. And the more orders that are sitting in the exact same place, the more times them orders are going to get ran. That's how it works, because that is liquidity. So more guys entering short, at a bearish order block, that's supply, that's resistance, that's yesterday's high, that's, you know, the top of a trend line, that's Fibonacci retracement level, that's whatever you want to say. Those are the places I'm looking to trade, because 98% of traders are short. That's the whole purpose. So we're looking for those areas to fail, looking for the areas to be pushed through. And that's what drives, you know, our long orders in those areas. And that's where we are on the chart. Okay. Is liquidity above the daily high? Wouldn't that be a good place to take a long on the close and the flip? Yes. It would be a good place to take a long, but normally that's gonna be something more than just daily high. Right, Jeff? Normally it's going to be already a supply demand zone, you know. Well, the high, you're going to say supply zone. Normally that's going to be a bearish order block. Normally the structure up there is going to be a double or triple top. Normally it's going to be, you know, whatever you want to say. Normally that's going to be a top of a trend line. Normally all those things are going to be sitting there at the daily high as well. So yes, that is exactly where we would go long if the setup presented itself and we got an entry. Yep.